usually a natural disaster, right? But yesterday I followed the session about the cyber crime, cyber security. Do you have experience about how cyber security or cyber crime with parametric insurance for this cyber security? Because usually cyber attack is for not a lot of institutions, right? And our government still the parametric insurance in Indonesia is still new because my national law usually for insurance indemnity is very different with the parametric. Again, do you have experience or about this cyber security insurance, parametric insurance for cyber security? Thank you.
So Lee may want to weigh in a moment. I don't think. I mean, it's certainly a theoretical problem, and particularly as we start introducing technologies to execute contracts, as well as so the whole thing becomes online, if you like, and potentially vulnerable to cyber attack. But I mean, I think it's certainly a risk that afflicts the whole financial system, as you very well mentioned. So I don't think it's a major problem for this area.
Yeah, and I'm definitely not an expert on this, but I would say, I mean, anytime there's a way to manipulate an online system in order to profit from it, criminals will find a way to do it. In the end, and I think it actually just becomes an insurance fraud issue in many ways, right? You can imagine an excess smart contract that is somehow manipulated to pay out to the beneficiaries who have, basically manipulated that smart contract. And so it is. I don't know very much about the security of blockchain, for example. My understanding is that you can build security features into it, but I don't know that the problem will actually be greater than in the world now in terms of insurance fraud. I don't know if that really helps, but that's my initial thought on that.
We still have 5 minutes or so.
Thank you very much. My name is Samuel from Nauru. Thank you for the presentation. We were late. I've got a question for you. Not that I don't understand your question. You're right, but I just few comments from your presentation regarding the financing as one of the challenges in your presentation. And most of the implication that you mentioned was caused by climate change. Climate change is an effect. And I'm wondering what is the challenge or issue why your DRM cannot merge with climate change, because I understand climate change has a bigger impact. However, most donors have merged DRM and climate change. Thank you.
Yeah, I mean, I'm sorry if my presentation didn't really go into much detail on climate change. I think we all recognise that climate risks need to be considered alongside the baseline level of risk, particularly when we're making long-lived investments in infrastructure and the like. So, yeah, the two are considered together for very good reasons, and I think they can be considered together in the bit of this report as well.
I think there's, if I understood the question correctly, I think there is an effort to integrate the two areas of disaster risk reduction and climate change adaptation, because when it comes to climate risks, I mean, they're very similar, they're very obvious. And so I think there is an effort, and not my area, but among international organizations and international institutions to look at these two issues together and maybe integrate some of the funding solutions that are available. That's just an opinion, not an intimate knowledge of the issue.
So naturally, flood risk is flood insurance is one concrete example of product to tackle a particular issue adaptation. Is there any products tackling sea level rise, for which is a really urgent issue for Pacific Island countries.
Well, so I come from a disaster risk financing background, as I mentioned. So the way I would look at sea level rise is it's a cyclone risk and it's a flood risk. And so the issue is not that the insurance, if you have an insurance coverage for cyclone risk, whether the sea is rising or not, the only difference is your premiums should become more expensive, or you may not be able to get insurance with climate change. And that's something that insurance companies and reinsurance companies are looking to deal with.
Yeah, please.
Hi, I'm Prashansa. I'm an actuary by training and an ILO social finance fellow working in the Philippines. From the very initial market research, we see that there's a huge demand for calamity risk insurance, but there's a clear supply side glut. What I want to know is, very short question and direct, what is the time horizon that we're looking at for having a disaster risk product in the market, especially in markets like Philippines and Indonesia?
So I mean, again, because I'm coming from the disaster risk side, if you're talking about a coverage for businesses or for households for climate risks or disaster risk in Indonesia and Philippines, I think it exists. You might know better than I. But one of I mentioned the study we're doing, and actually Indonesia and the Philippines are two countries that we looked at. So we did talk to a number of insurance companies in both countries, and I think they do offer that product. And my understanding actually is that takeout, especially in the Philippines, if I remember, is actually fairly low, maybe because the cost is too high. But I don't know if that's consistent with what you understand.
Yes, that's right. Actually, there aren't too many insurance companies which are offering this in the first place. There are reinsurers who are, they've actually had an issue in the past when there was Typhoon Haiyan, if I'm right, and then the product actually got folded up. So there are renewed talks, but again, nothing is really moving in that direction. So.
Yeah, so I think I think what it is that there is definitely insurance available, but it's probably not tailored to sort of more vulnerable segments of the population or small businesses. And I think you're absolutely right, there was an effort to devise a specific insurance product in the Philippines for that, and it hasn't moved forward. You might know more about this. No, you don't know more about this. So it isn't something that we're working on, but it is. I know that there has been talks about that. In the end, what happens is, I mean, there's only a certain capacity to pay for this kind of insurance coverage among people who have, a number of competing demands on their income. And so these kinds of schemes usually, the benefit of them is by pooling a lot of risk, as you would know as an actuary, is that the price becomes lower and it becomes more affordable. There might be some government subsidization behind it. But as far as I know, it hasn't taken off yet in the Philippines, but it's something that has been talked about.
I just reminded a couple of studies looking into rainfall index, barometric index insurance for the farmers in India. ICICI, Lombard, and also IFCO Tokyo. There are two products as I remember. So this is a drought insurance. So normal year, no rainfall. Although farmers pay premium in advance, but no payouts. And then next season, they tended to withdraw from insurance participation because maybe from the farmer's viewpoint, this is like a risky assets, investment or something. So I think that there are some psychological elements also to design customized products for a segment of society. We still have a couple minutes, and maybe a final question we can take, please.
Good morning, I am Bong Lim from Davao City. I would like to share something about climate change. Our planet, like our body, can be compared to a wine glass. When subjected to extreme changes, it breaks. Actually, the earthquake on October 29 is something that was forewarned to me 48 hours before it happened, and I sent a note to the president about it, but I did not mention that it will be on that particular day because it falls on my 59th birthday. But unfortunately, it did strike. Now my question will be for the insurance sector. In case you have a surge of applicants for a certain policy because they got wind of something to this effect, what would you do? Thank you very much.
Well, I think it's a good question, and I mean, I suppose it probably speaks to the regulation point that both Lee and I raised at the end of our speeches. You know, companies that offer these contracts on the market and enter into agreements need to be held to them, you know, and it's their fault for mispricing insurance contracts if that's what they're doing. So I think in order to sustain public confidence in insurance markets, which is an important point to raise, we need to make sure that, you know, if something's available for sale and the company owns it, it needs to sell it.
Just one thing to add, I think if I worked for an insurance company, I don't, but if I worked for an insurance company, I'd probably say something like, insurance is there to deal with uncertain or unknown events. So if you have, you know, a solid early warning that the earthquake is going to occur in 48 hours, I think the insurance company would probably have some resistance to writing a coverage for you for earthquake, knowing that it's going to occur. And I think usually I don't think insurance generally works that quickly in the first place. Maybe with parametric or new technologies it'll work quicker, but generally insurance companies will resist insuring something. Like if there's another example would be a cyclone that's heading your way. I don't think you'll be able to get cyclone insurance the day before it's meant to hit.
Thank you very much. With that, we'd like to conclude this first session. We will have a 20 minutes or so coffee break, starting with the photo session here on the stage, in order to continue fruitful discussion over the refreshment. So please join me to thank Oliver and Lee for a really exciting presentation discussion. Thank you very much.
So let's reconvene at 10:30 here. You can go outside and take your coffee, engage in discussions, but also you're allowed to bring your coffee and food. And to all speakers and panelists, please come up to the stage. We will have a short session now.